Okay, let's kick things off with a classic exam-style question. So, you've got a seller in Punjab sending goods worth 48,000 rupees to a buyer over in Gujarat. Now, the value is under 50,000. So, does he need an e-way bill? Yes or no? Most students would jump to say, nope, not needed.
But what if I told you the real value we should be looking at is actually 56,640 rupees? All of a sudden, things aren't so simple, are they? This right here is a classic ICAI trap.
And there it is. The correct answer is a big yes. An e-way bill is absolutely mandatory. So why? Well, it's because that 50,000 rupee limit isn't for the taxable value. It's for the consignment value. And consignment value includes GST. You add that 18% tax onto 48 grand and boom, you're over the limit. This is exactly where marks are lost in the exam.
So, with that little wake-up call in mind, welcome to your complete revision for mastering the e-way bill. We're going to break down every single rule, every exception, and every little detail in this chapter to make sure you are 100% ready for your exams.
All right, let's start from the top. Section 1, the basics. So what is this e-way bill thing really, and why do we even have it?
At its heart, an e-way bill is just a digital passport for your goods. It's an electronic document you generate on the GST portal that proves goods are on the move. Now, for your exams, you'll want to remember it's backed by Section 68 of the CGST Act and Rules 138 to 138E. The whole idea was to ditch the old-school physical checkposts and create a seamless digital system to track goods and stop tax evasion.
Okay, let's circle back to that killer term that tripped us up at the start, consignment value. This is the value determined under Section 15, basically whatever's on your invoice or challan, and here's the golden rule. I want you to burn this into your brain. It includes all taxes, CGST, SGST, IGST, cess, the whole shebang. The only thing it leaves out is the value of an exempt supply if it happens to be on the same bill as taxable goods. This definition is everything.
So, we know what it is, now let's get into the nitty-gritty. Section 2, how do we actually generate this thing? Let's talk about the when, who, and how.
So when do you absolutely have to generate one? It's pretty straightforward, really. Two things need to happen. One, there has to be a physical movement of goods. And two, the consignment value, which we now know includes tax, has to be more than 50,000 rupees. And listen, the reason for the movement doesn't matter. It could be a sale, a stock transfer to another branch, or even goods you're receiving from an unregistered person. If those two conditions are met, you need an e-way bill.
But you know in GST there's always an exception, right? And this one is a favorite for MCQs. If you have an interstate transfer of handicraft goods by a person who is exempt from GST registration, you must generate an e-way bill. It does not matter what the value is. Even for 10,000 rupees, it's mandatory. So watch out for this one.
All right, let's talk about a situation that pops up all the time in business, the build to, ship to model. Look at the diagram. You've got A who places an order with B, but A tells B, hey, don't ship it to me, ship it directly to my customer, C. So who's on the hook for the e-way bill here?
The rule is actually super simple. Think about it. Even though there are two transactions, B bills A and A bills C, there's only one physical journey for the goods, right? From B straight to C. And the rule is one journey, one e-way bill, so you only need one. And here's the important part for your exam. Either A or B can be the one to generate it.
Okay, let's actually look at the form itself now. Form GST-EWB-01. It's split into two main sections, and you need to know both of them inside out. They are Part A and Part B. I like to think of Part A as the what and where part. It has all the consignment details, who's sending it, who's getting it, where it's going, the invoice details, the value, HSN code, all that stuff. Then you've got Part B, which is all about the how. This is the logistics part. This is where you put the transporter's details and, most importantly, the vehicle number. Now, this next point is huge. Please, please remember this. An e-way bill is technically not even valid for moving goods until Part B is filled in. You can fill out Part A and get a unique number, that's fine, but the clock on its validity doesn't start, and you can't legally start moving the truck until that vehicle number is punched into Part B. It's like having a plane ticket, but no plane.
But, like always, there's a little exception. You don't need to fill out Part B if the movement is a really short one. We're talking up to 50 kilometers, and it has to be within the same state. This is basically for that first leg of the journey, say from the seller's factory to the transporter's go down, or for the very last leg, from the transporter's go down to the final buyer. It just covers that first and last mile.
So we've mentioned the transporter a bunch of times.
Let's really focus on their role now. They are a huge piece of this puzzle and have some very specific rules to follow, from the moment the bill is generated to when goods are moved between vehicles.
So, who actually clicks the Generate button? Well, it depends. If the supplier is using their own truck, it's on them. But if they hand the goods over to a transporter, the responsibility shifts. The transporter must generate the e-way bill using the Part A info given to them. And if the supplier doesn't give them that info, too bad. It's still the transporter's job. Now, if the goods are going by rail, air, or sea, the responsibility goes back to the registered person, so the supplier or the recipient.
Now, you might be thinking, what if my transporter is a small operator, not even registered under GST? Great question. They still have to play by the rules. They need to go to the e-way bill portal and enroll to get a 15-digit unique transporter ID, or what's called a transit. This lets them operate within the system without needing a full-blown GST registration.
Okay, what happens when goods change hands? You know, they go from a truck to a ship to a plane and then another truck. This is called transshipment. You don't need a new e-way bill every time. You have one e-way bill for the whole journey. You just keep updating Part B. So you start with the first truck's number. When it moves to a ship, you update Part B with the ship's document number. Then for the plane, you update it with the airway bill number. And for the final delivery truck, you update it one last time with a new vehicle number. Simple as that.
Moving on, let's talk about making life easier for transporters, and also what to do when you make a mistake. This section covers consolidated e-way bills and the rules for canceling one.
Imagine a truck driver carrying goods for 10 different people. That's 10 different e-way bills to manage. Not very efficient, right? That's where the consolidated e-way bill comes in. The transporter can generate a single master document, which is Form EWB-02, that just lists the serial numbers of all the individual e-way bills in that truck. It's totally optional. And just remember, it doesn't get its own validity period. The validity of the original, individual bills is what counts.
Okay, so what happens if you hit Generate and then realize, oops, wrong invoice number, or the customer cancels the order? You can cancel the e-way bill, but listen closely. There are two massive conditions. First, you have to do it within 24 hours. Second, and this is a huge ICI trap, you cannot cancel it if a GST officer has already stopped the truck and verified it on the road. Once it's checked, it's locked in. Game over, you can't touch it.
So, how long is an e-way bill actually good for? Well, it depends on what you're shipping. For basically all normal cargo, the rule is 1 day of validity for the first 200 kilometers. For every additional 200 kilometers, or even a part of it, you get one more day. But if you're moving something huge, what they call over-dimensional cargo, or if the journey involves a ship, the rules get way tighter. For those, it's 1 day for just the first 20 kilometers and 1 extra day for every 20 kilometers after that. You have to know which rule to apply.
But the trickiest part isn't the distance, it's how you count a day. This is super important. The validity starts the moment you generate the bill, but day one doesn't end at midnight on the same day. No, it ends at midnight of the next day. Let me say that again. Midnight of the day immediately following the date of generation. This confuses so many students.
Let's do a quick quiz to make sure you've got this. Let's say you generate an e-way bill at 11:58 p.m. on March 14th, just 2 minutes before midnight. When does that first day of validity end? The answer is at midnight between March 15th and 16th. So by generating it in those last 2 minutes, you effectively got a whole extra day of validity for free. See how that works?
Okay, let's kick things off with a classic ICAI curveball. You see a question like this. Goods are worth 47,000 rupees. You know the limit is 50,000 rupees. So you think, no e-way bill needed. Simple, right? Well, wrong. And that exact line of thinking is where so many students lose easy marks. Stick with me, because by the end of this session, you'll understand exactly why that logic is flawed and how you're going to get it right every single time.
To really get to the bottom of that trap, we're going to use this very typical exam-style problem as our guide today. So, we've got the Nunjai associates selling goods for $40,000 and charging $7,000 for transport. We'll come back and solve it completely at the end. So first up, what happens after an e-way bill is generated? Well, the person receiving the goods gets a notification. Now they have a choice. They can either accept it or reject it. But they can't just leave it hanging forever. The rule is crystal clear. They have 72 hours or the time of delivery, whichever comes earlier, to respond. If they do nothing, the system just assumes it's accepted. That whichever is earlier part, that's exactly the kind of tiny detail ICAI loves to test.
And here's some good news, a simple but really crucial point for any interstate movement. Think of an e-way bill as a national passport for your goods. If you generate it in Gujarat for a shipment to Maharashtra, it's valid everywhere in between. It's valid across the entire country. You don't need separate permits for each state you pass through. It's one bill to rule them all.
The all-important exemption list. You know, knowing when you don't need an e-way bill is just as critical for your exams, because ICAI absolutely loves testing these specific exceptions.
Let's start with specific goods. The list is pretty interesting. We're talking about things like LPG for homes, kerosene that's for the public distribution system, and even postal baggage. Then you have the really high-value stuff. Jewelry, precious stones, and even currency are exempt. Also, used personal items. And here's a totally logical one. If you're moving goods on, say, a bullet card, basically any non-motorized vehicle, you don't need an e-way bill. And finally, things that are outside the scope of GST anyway, like alcoholic liquor and certain petroleum products, are also on this list.
The list keeps going, this time based on the type of supply or movement. So, if the goods themselves are exempt from GST, you generally don't need an e-way bill. But there's this one weird exception to remember: de-oiled cake. Don't ask me why, just remember it. Also, anything that falls under Schedule 3, which is treated as no supply, is out. Then you have specific movements, like from a customs port to an inland depot for clearance. And a very practical one: moving empty cargo containers doesn't require an e-way bill.
And to finish off our list, we've got some special cases. Any transit cargo heading to or from Nepal or Bhutan is exempt. Any movement by the Ministry of Defense is out. If the government is the one sending the goods and they're using a train, no e-way bill needed. Now there's a really practical one you should remember. If you're just taking your goods to a weighbridge and back, and it's within 20 kilometers, you're exempt as long as you have a delivery challan. And lastly, just moving empty LPG cylinders around for refilling, not for sale, is also exempt.
Let's talk about what happens on the road. You've generated the bill, the goods are in the truck. Now what? Let's look at what the driver actually needs to carry and what the inspection process looks like.
The good news is, the law is pretty flexible here. The person driving the vehicle needs to carry two main things. First, the basic document for the transaction, so the invoice, or a bill of supply, or a delivery challan. Second, a copy of the e-way bill itself. Now, this can be a physical printout, or it can just be the e-way bill number shown on a phone. That is perfectly fine. And things get even easier if an e-invoice was issued. In that case, just the QR code on the e-invoice is enough. Oh, and one more thing. For imported goods, you also need to carry a copy of the bill of entry.
So, what happens during a roadside check? An authorized officer can stop and inspect the vehicle. If they do an inspection, they have to upload a summary report online within 24 hours, and then a final report within 3 days. But here's the really important part, a rule that's designed to prevent harassment. Once a vehicle has been checked and cleared, it cannot be stopped for another physical check anywhere else in that same state, unless, of course, there's some brand new specific information about tax evasion.
And check this out. This shows you how much transparency is built right into the system. To make sure officers don't just hold up trucks for no reason, the law gives the transporter a right. If their vehicle is stopped and detained for more than half an hour, they can actually go onto the GST portal and report it. It's a pretty powerful tool to ensure compliance.
All right, Section 4, detention and blocking. We've gone through all the rules. Now let's talk about what happens when you break them. This is where the law really shows its teeth.
One of the biggest penalties is something called blocking. It literally means a taxpayer is blocked from generating new e-way bills. But here's the detail where marks are always lost. Who gets blocked? It is only the defaulting supplier, and they are only blocked from generating e-way bills for their outward supplies. The recipient of the goods, not blocked. The transporter, not blocked. This distinction is absolutely critical to remember.
So what kind of behavior gets you blocked? It all comes down to not filing your returns. If you're a composition dealer, it's for not filing for 2 straight quarters. If you're a regular taxpayer, it's for not filing your main returns for 2 tax periods in a row, or for not filing your GSTR1, which is your statement of outward supplies, for any 2 months or quarters. And of course, if your GST registration gets suspended, you're automatically blocked too.
Let's use an example to really lock this in. We have Mr. A in Delhi, who hasn't filed his GSTR1 for 2 months. Then we have Mr. B in Haryana, who is a perfectly compliant taxpayer. If Mr. A wants to sell goods to someone, he can't generate the e-way bill. He's blocked. But what if Mr. B is the one buying goods from Mr. A? Can an e-way bill be generated? Yes, because Mr. B, the recipient, is not blocked. He is allowed to generate the e-way bill for his own inward supply. This scenario makes it perfectly clear who the blocking actually applies to.
Okay, one last but super important rule before we go back and solve our opening problem. Let's say you're transporting goods that are on that exemption list, so no e-way bill is required. Does that mean the driver can just hit the road with no documents at all? Nope, absolutely not. Rule 55A makes it clear, even if an e-way bill isn't needed, the driver must still carry the basic document, like the tax invoice or the bill of supply. Don't forget this. And now, the moment we've been waiting for. Let's circle all the way back to that question from the beginning, the Dhananjay Associates problem. Remember, the goods were worth 40,000 rupees and transport was 7,000 rupees. So, is an e-way bill required? The answer lies not in those numbers themselves, but in the final consignment value, which comes out to 55,460 rupees. So how on earth do we get to that number? This is the trap. The 50,000 rupee limit isn't just for the value of the goods, it's for the consignment value. And the law defines that as the value determined under Section 15 plus the GST that's charged. In our problem, the supplier was responsible for the transport, so that 7,000 rupee freight cost gets included in the value. That brings our taxable value to 47,000 rupees. Now add 18% GST to that, which is 8,460 rupees. And there you have it, a total consignment value of 55,460 rupees. Since that is more than 50,000 rupees, an e-way bill is absolutely mandatory. And that right there is why the student in our first slide failed the question.
Let's wrap this up with one final knowledge check just to make sure those exemption rules have really stuck. So Talilal is transporting alcoholic liquor for human consumption. The value is 1.5 lakhs, way over the limit. But he doesn't generate an e-way bill. Is he right or is he wrong?
And the answer is, he is perfectly correct. Remember way back on our exemption list? Alcoholic liquor for human consumption is a specifically named item that is exempt. It doesn't matter if the value is 1.5 lakhs or 1.5 crores, no e-way bill is needed. And that's really the key takeaway here. To master e-way bill rules, you have to know not just when to generate one, but also, just as importantly, when not to. I hope this explainer has made these rules crystal clear for your exams. All the very best.